The bulls make bearskin rugs as the market rockets higher. Are there any bears left? This is Invest with Jacob. Okay, guys, so in yesterday's video, we were looking for the bears to try to hold that resistance area at the trend line and moving average. They were obviously unable to do so as the bulls gored them, trampled them, gutted them, and made bearskin rugs out of them. Now the question is, are there any bears left? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, no trades yesterday. Once the market moves that high and we're not in the market, we were flat before the market opened. You're kind of chasing the move, and there was no pullback to enter, nor was there a breakdown to enter. So flat yesterday on the trading, but I do love that 2 weeks ago, the emotions of the market had everybody asking me how I could be looking higher, and now they have everybody asking me how I could be looking lower. So always fun to see how the emotion plays out in the market. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 2-hour futures chart for the S&P 500. And obviously, they shot it directly higher here up through the trend line resistance. There's a moving average on the daily, the 618. They blew through all of it on their way higher here toward the 764 at 45.51. And essentially what we're looking at now is very likely a fifth wave higher here. And A waves can play out as 5 waves. And if we're getting a bigger A, B, C up, that's kind of how we would look at this. Because we've come down into wave 1 territory on this move down, this would be a bigger diagonal to the upside. So we'd be looking at a 3-wave pattern up where this would be A, B, and C up towards 46.50, potentially a little higher than that, but that would just be the A wave overall, the bigger A wave. So this would be A of A, B of A, C of A, and then A would complete. Then you'd look for another B wave and then C higher from there. And again, that would target around that 4,900 to 5,000 area to give us another all-time high. And then we'd be looking down from around that region. So overall, that's kind of what we're looking at from a bullish perspective. I am shifting to a bullish stance because of the move up today through the 618 and toward the 764. But the caveat is I still want to see the pullback on the market. So when they pull back from wherever we decide to top here, I still want to see a corrective pullback that holds support. Bear market rallies can be quite strong. They're still well within the resistance area of a wave 2. And even though the NASDAQ does have a more bullish posture, I just want to see this pullback to give us that feeling of comfort as we get into the support area and then see a reversal or a push higher out of that support area to give us the strong feeling that we are moving up in this C wave of A towards the 46.50 area. So how high can they take this is the question. Well, they can keep going until support breaks. I remember over here in August, everybody, or I guess June and July to the start of August or so, everybody was telling me there's never going to see 4,300 again. They're not going to stop. They're going to all-time highs directly. And I said, no, that's just not how the market works. They can keep pushing until they break support, which they did, until they broke support. And then we saw the pullback to 41.50. So there will be a pullback. I'm not worried about that. Just the question is from where? And that's going to be when they break support. And right now, key support moves up a little bit to the 4,400 area. And ultimately, we want to see that 43.50 area break where last Thursday's low came in. So that would be the support level to break for me to say we're comfortably getting this B wave or potentially even one of 3 pullback to the downside. And until we see that, okay, until we see that breakdown, pressure remains up in the market. So the levels that we'd be looking at are going to be the 45.06 area, which they obviously hit today, up to 45.84. And the way we come up with those levels is you measure waves 1 through 4 off the low. So you got the low and you measure, wrong tool. Use your trend-based fib extension. You measure from the low up to the top of wave 3, down to the bottom of wave 4. And I already have those fibs on there, so it's going to duplicate. But that's what we're looking at here, that pullback. Okay, and that's how we get these numbers. And wave 5 generally targets the 0.5 to 0.618 extension of waves 1 through 4. So that's where we'd be at, that 45.06 to 45.41. 45.84 would be an indication if they break out over 45.84, that would be an indication that we are already in this C wave and would be targeting that 46.50 area in a more direct manner, where We are not getting much of a B wave pullback. This little glitch on Thursday would be your B wave, and then C up. And before you tell me this can't be your B wave, I would warn you that we had a diagonal to the downside no matter how you count it. It's either going to be A, B, and then C was a diagonal, or 1, 2, and then 3, 4, 5, as you can see in red. So either way, it's a diagonal to the downside. I warned that diagonals often retrace extremely fast back to their origination point, which is back up into here, which is where we are. So this can very easily be a wave 2, or even we could be in C of A already, with that being the B wave that we would have to count, because that's how diagonals play out. So this, while not ideal and not something I'm counting on, if they break over 45.84, I would assume we're on our way to 46.50 to complete the A wave of the move up. So overall, we're waiting for support to break. They need to get down back below this 44.28 area, and ultimately this 43.50 area down here from last Thursday. Once we break down below that, we can see an ABC, and then we would look higher. Over on the NASDAQ, okay, so as I've been saying for a while now, on the NASDAQ, we have a much more bullish posture. They did not break the pivot. They have a more impulsive structure to the upside. They have an impulsive structure off of this move up. Everything about the NASDAQ is more bullish, and they broke over the wave 2 high here, which cancels the immediate diagonal play out. Now, that doesn't mean that they don't have a downside pattern. It just means that the pattern that we were tracking has canceled or invalidated. And so if this is going to play out to the downside, which is the alternate count, by the way, I'd want to clarify that that is not the primary, nor is it expected. If this is going to play out to the downside, we would have to count this as a big wave 1 of a bigger ending diagonal, where this C wave down is going to take shape as an ending diagonal, where you would have A, B, and C for wave 1 of C. Then this would be wave 2 of C. And then you'd have A, B, and C for 3 of C, and so on down into the breakdown area. Now, that is not the idea. That is not the plan right now. The plan is the bullish structure that we have pointing towards all-time highs. But if we do get a breakdown of this low and we see 5 waves down on ES, that would give us a very strong indication that that is what is going to play out. And it's going to be a little more complex structure to the downside instead of a more impulsive structure like you would see in a standard C wave. So they're not dead to the downside, but they are basically on life support. Any 3-wave structure from here that comes down, holds support, and comes back up and takes out whatever high we make, if that happens at any point that we take out, pull back and take out a high, that is very, very likely pointing us toward the 17.8 area overall for a new all-time high on the NASDAQ. So that is going to be the primary count. Again, the pullback on the ES is what's important, unless by some crazy measure they just go ahead and push directly higher. That's not generally how it works. We should be seeing a pullback. The target for the NASDAQ move up here is the 15,868 area to 16,023 area. They're right in that area right now, so perfect area for them to want to pull back. On both charts, I didn't mention this on ES, you generally want to see a minor 4 and 5 here, or micro 4 and 5, where you get a little bit of a pullback, one more high, and then start down so that you get a more complete structure. They don't have to have that, but that is a much more complete structure when you see that, and it gives you a nice feeling that the wave counts are playing out a little better. So right in our wave 5 target area, 15,868 to 16,023, we'd be looking for a wave 2 pullback, and then a 1 of 3, a 2 of 3, and then a breakout from there. And again, anything that looks like this and then breaks out over the high is going to very likely lead us toward the 17.8 area and new all-time highs. So again, the pullback is still the story. We have shifted to the bullish look, but I want to see the pullback in a corrective manner, hold support, and once that happens, we will definitely be on board with the move to all-time highs. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial. This is because I want you to get in there. I want you to make sure you love it, become part of the trading team, and make sure it's for you before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and understand the market in a way that finally makes sense. You can see from the comments that traders are using it to their advantage and finally understanding when and where and how to enter trades. And that's because the key levels that Elliott Wave delivers are rooted in technical analysis and allow you to understand when and where the market's going to move. It's very confusing when you see hawkish behavior from the Fed and the market shoots higher, or you see a great earnings report and the market shoots lower. The news doesn't really matter in that sense, where good news makes the market go down and bad news makes the market go up. So you need something that tells you where and when things go wrong, and that's what Elliott Wave does. This course is 25 videos in 3 parts, where I go over the introduction, we go over the expectations, the mindset and your emotion, the KISS method, and why Elliott Wave works. And this mindset and emotion right here is worth the price of admission. I talked about it in the intro. It's funny to see how emotional people get when the market moves down fast. They all get, oh my God, it's going down forever. And moving up fast like it is now, everybody's all bullish. Emotion is the crusher of bank accounts. And this tells you how to manage that and understand it and use it for Elliott Wave Theory. Then we have our chart setup and tools. All of these tools used on your chart, along with the wave counts, help you confirm tops, bottoms, turns, support, and resistance, all the key numbers you need to trade effectively. And then we have our Elliott Wave for Beginners area, where I go through each wave, how they work, where they fail, where they succeed, what they look like, how to analyze them, set them up. I go through the theory of alternation, corrective depth theory, the pivot, impulsive waves, all the things you need to know for Elliott Wave to get started. The really cool thing, guys, is if you don't want to pay the $67, I completely understand. And that's why it is included for free in both of our monthly rooms. So if you become a monthly member, you get access to the Elliott Wave course for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts, as well as the training course you just saw. We trade the SPY and the QQQ, and we swing in day trade, which means we trade quite often. But if you are looking for futures trading, and you're looking for advanced methods and individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. Pressure is up until support breaks. They blew through the big resistance here. Now they're in their 45.06 to 45.41 area. We would look for a pullback that first breaks that 44.20 area and ultimately down through 43.50. 45.85 in a direct manner would point us more directly toward 46.50. Over on the NASDAQ, they blew through the bigger or the smaller diagonal setup. They could potentially play out a bigger diagonal to the downside. I don't see that as likely, but if they do break that low, we will shift to that count. Right now, we're essentially looking for a pullback that holds support, and then a 1 of 3, 2 of 3, and breakout to the upside. Guys, that is your market update for today. I will talk to you tomorrow.